Hey there, traders. Welcome to Top Tier Outlook for the upcoming week, which would be May 6th. Taking a look at what we're going to be dealing with as we go through this first full week of May. We had a lot of excitement last week, and I thought we'd take a look at two main things to kick off this update or this discussion. And one is, what is the general trend for April, May? We were kind of not joking, but yeah, sort of joking about the whole sell in May and go away thing. And if you're a reader of the Top Tier Outlook, we take a look at watch lists. We look at different macro nuances that help us as traders, not what's going to happen over the next 2 years, 5 years, 6 months, 3 months, whatever. What can we as traders use in terms of data to trade the upcoming week, right? So, whenever traders start talking about implications for December or a year from now, that's not a trade, is it? I mean, I guess it is for some folks, but most of us are in and out within days, if not weeks. So let's keep our analysis, calibrated to that. So with that in mind, we kind of were saying that if April had a way to have a nice rhyme like sell in May and go away, it'd probably have a lot more traction and a lot more truth, because sell in May and go away just isn't the case when we start taking a look at historical lookbacks at what happens in indices. In fact, if we look at a 5-year look back, just a 5-year, right, of what tends to happen, what really does become a problem is how many years are we looking for a tendency? And in this case, if I'm only looking back 5 years, I'm looking back, basically 5 years from this point, two of the biggest sell-offs known to humans happened in 2019 and 2020. And those are heavily weighted when all we're looking at 5 years, and two of them had really swift sell-offs in Q1. This is heavily weighted by those two Q1 2019 and Q1 2020 sell-offs. We got to keep that in mind when we look at a look back of 5 years versus 10 years versus, say, 25 years, what have you. But ultimately, April does tend to be a far more bearish month, again, skewed by those two. There we go, by those two events. But really, there's nothing sell in May and go away that I would actually, sell when and come back when, right? So remember, things don't have to move because of a tendency. And even if it rhymes, I guess it's very compelling, but hopefully we're dismissing the fact that May is not necessarily a bearish month. In fact, April is. But like I said, nothing seems to rhyme properly with April for that catchy little saying. Now, the other thing we want to take a look at is what's happening with Fed fund futures. So these are the Fed fund futures target rate probabilities. July, just like the June meeting and I'm sorry, just like the May meeting we had on the 1st, the June meeting is not where the conversation about rate cuts is happening. Neither is the July meeting, although after non-farm, you can see a little bit less solid an expectation for a hold. And that pesky little cut is sitting there at 34%. Now, again, I'm not really super expecting a July rate cut because the data simply isn't there to support it. Where the data becomes very convincing, where we can see there's a lot more expectation, and I'm going to go grab my drawing tools here. There we go. Where there is a lot more potential expectations as we cruise on into the September meeting. So I'm going to show you what these particular columns mean. And so this here would be a hold, right? And because that's where we are right now. So that's the hold column right there. And there's a 33% expectation of that. There's a 48% chance of a quarter point cut, right? That's what this column represents right here. And this is, again, for the September 18 meeting. The next column, which is kind of peculiar, because you say, what is 17.7 with this expectation here mean? This would mean that this would be the second quarter point cut. This column is factoring in that there's a cut at the July 31 meeting and then a second cut, which would come on the September 18. So that's what that's representing. Is that likely? No, it's not likely at all. But nonetheless, it's there. That gives you an idea of the direction that traders are expecting rates to go in. Really important. And of course, forget that 1.2% expectation. So if ever anyone ever says, hey, there's a chance that, remember, a percentage can accompany that and should accompany that type of analysis, that type of statement. The Fed is going to hold without a percentage also is an incomplete, sometimes downright misleading statement. And again, we're using the target rate probabilities, which use something called the Fed Fund Futures. It's a futures contract, just like we would trade the S&P or gold or crude or bonds. We can trade what is expected to happen at the different FOMC meetings. And that's what you see here on this screen. And ultimately, what we want to remember is these can always change with every single hot zone, especially the ones around inflation and the ones around jobs. And we know what non-farm payroll did. It absolutely sent expectations a little bit more to the dovish side, and it helped equities rally a bit. So this is where we sit. And by the way, this is the best way. I'll arguably even say the only macro that anyone has to really pay attention to, because all the different releases, inflation, jobs, GDP, consumer sentiment, retails, all those things ultimately map to this, right? It ultimately maps to what do we expect the Federal Reserve to do and how, by what percentage do we expect them to do it? So everything macroeconomic just sort of lends itself to where our rate's going to be. So as long as we remember why we care about non-farm, why we care about GDP, why we care about JOLTS, why we care about PMIs and PCEs and CPIs, that alphabet soup lands here. If you want a magic decoder ring, for that, that's what this is here. So this is the look that we have right now, expectation-wise, from the Federal Reserve. So there's your macro couple of minutes. All right, so then moving on to the economic calendars. We took a look at seasonals. Let's go ahead and take a look at the economic calendar. And if we're looking at the economic calendar, whether you use Forex Factory, which I'm a big fan of, whether you use Trading Economics, also a great one. There's so many different economic calendars out there. I would say, obviously, this time of year when we're going through earnings season, it makes a lot of sense to not only keep an eye on an earnings calendar, not about what's coming this week. That's next to useless. What's coming up in the next 3 weeks, 4 weeks, 5 weeks, 6 weeks. So we get a really healthy look ahead. So ultimately, what we want to remember with the economic calendar is, again, what are those different data releases we're going to get that give us insight into what could happen with the Fed, or what are these Fed chuckleheads themselves having to say? So FOMC events, obviously, like what we're going to have tomorrow, do matter. By the way, I will also say it will be very interesting to see how the tone of FOMC members whose name is not Jerome Powell changes, because Jerome did not in any way hesitate to basically, I don't want to say undermine, but dismiss some of the comments that were made by another FOMC member that started talking about rate hikes. That was one of the lunatic things that was factored into April and caused a lot of the uncertainty, therefore chop and rise in the VIX that we saw in April. And by basically dismissing that, what I'm hoping is, A, it'll get these Fed members to shut their traps about things that really aren't in the works. And B, it will just get a much more coherent message out of the Fed members where they just should line up behind the chair, right? I mean, that'd be great. So a lot of FOMC speak. Here's another pair of FOMC speaking engagements on Wednesday. So again, we have two on Monday, pretty quiet through Tuesday for the different hot zones and even FOMC members speaking. So Tuesday, we get a bit of a reprieve. Wednesday, they're back. And then going into Thursday, we're going to hear from the MPC. Now, when are other central banks relevant? When they're G7 and G8 central banks, it does matter. More so for the currency if you're trading the dollar or the euro, more so for yields if you're trading the bond and notes. But for the most part, the only central bank that I've seen make a huge impact on even U.S. equities would be Bank of Canada. But even then, I would just be aware of the different banks. We have the Bank of England on Thursday, 30-year bond auction on Thursday as well. Of course, the weekly unemployment claims. So you'll notice pretty quiet it's pretty quiet on the hot zone front until we get to Friday, where hopefully Bowman's the one that was running her mouth off about hikes. We'll see what Bowman says on Friday. That should be interesting. 9 a.m. Bowman, and then 10 a.m. University of Michigan Consumer Sentiment. And then we have a little bit more FOMC speak with Barr. So we have quite a few FOMC speaking engagements where we lack a lot of hot zone specific data releases. Here come the FOMC members. So that's what we've got on the calendar this week. Now, what about the other calendar that we need to be aware of? And that's where I'll use a calendar over at Estimize. And I'll get into Estimize a little bit more in maybe Charts and Coffee, and certainly in the Sector Secrets Mastery room. But we want to be aware of those high concentration weighted stocks with earnings, which sectors they're going to influence, and obviously which indices they have the most influence on as well. All right, so let's get over to the charts and the questions. As always, go ahead and type them in if you do have any questions. First place I do want to start is I'm going to actually just clean this chart up here just for a moment. And I'm going to take a look at the VIX with everybody, because look, one of the things that in the mastery we talked a lot about was what environment was ideal for account growth. You know, there are environments that are ideal for account growth. I mean, obviously trends are great, but what are all the circumstances that surrounded the trends that we saw late Q4 and then into Q1 of this year? And a big part of that was the relative predictability of the range that we saw through the latter part of last year and into this year. And the line that I really want to emphasize is this line up in here, which is where we were for most of the Q1, right? So all through here, this was fantastic. This is one day of a move through the upper end where we tend to see a lot more volatility. We tend to push the outer edges of historical volatility. We get a lot of first and second standard deviation moves, right? But then take a look at what happened. And this is normal. We just go right back into the range. So it's not unusual to see a session here and there, maybe two, right? 1 to 2 up at the upper end of the range, or even exceeding the range. But then notice how quickly it retreats back to just sort of this normal operating range. Fantastic. All right. Now, what happened in April? Look, 1 or 2 candles, one candle, maybe 2 if you want to include the candle day after. We had multiple candles trading above this 16 level, not just one day, not just 2 days, but again, so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Got a reprieve for a couple of days, 15 candles at or above the 16 level, where before 2 candles, you can call this 2 candles if you'd like. You can call this 2 candles if you'd like. Up until this point in the year, we had 6 total candles that were either at or above that level, 15 of them through April. So if you want to know, Rog, is it measurable what happened in April? It doesn't have to be the dark at the top of the stairs. This is what happened. That's what happened in April. And I will tell you, if you ask me, Rog, how many times have you seen prolonged periods of time of this kind of volatility? It was 2 things. It wasn't just a prolonged period of above the normal range volatility that we dealt with. It was the fact that that volatility was not accompanied by the clarity of a trend. Typically when fear is that high, right? When confusion or uncertainty is that high, it's not uncommon to see the sell button hit a little bit more consistently, lower lows and lower highs. We get some follow through. But when we don't get follow through, when we do not get it, we end up with this whippy chop. And that's exactly what we ended up with. Because for as much as there was a lot of uncertainty, there wasn't this overwhelming fear, right? Because we never organized into a downtrend for any meaningful period of time. Bearish chop. Bearish momentum is very different than a downtrend, and that just never got any traction. That's difficult, right? If you go back to Q1 and Q2, after the initial chaos was sort of the dust settled, we had downtrends we could trade. We had follow through. We had lower lows and lower highs. So it's not that I always want to look to the long side, but I really didn't have the justification other than on a very short-term time frame, maybe 5 minute, maybe hour, to even get bearish. And that's another thing that caused a lot of problems, which is really a lot of bearish chop. All right, now what's happening at the moment? So now we got we have the backdrop, we have the backstory. What about now? And the question I get a lot now is, Rog, is this over? Is the normalcy back? And the reason I say, if I'm going to use all those metrics, the normalcy is back because the VIX has been able now to not only get below that 16 level that I was talking about. So here it is again. Not only could we get below that 16 level, we have, for the most part, not just stayed below it, because as you can tell, being at or above is still a lot of chaos, right? But what we need to see is some acceleration to the downside away from it. We need to get away from that red line. And that is what we are very slowly starting to see. We've only got a handful of sessions with that acceleration to the downside away from 16. The further we move away from 16, but not quite to 12, right? The more that we can stay in an area that is about 13, right? Maybe about 15, the better off we are. This is the sweet spot. This is the sweet spot. And if we can operate there, we are fine. A few times we might get above it, a few times we might get below it, but if we can operate between 13 and 15, and this is the VIX futures that I'm looking at, we will start to see follow through in a way that is maybe not as predictable as we saw earlier this year, because a lot of the predictability that we had earlier this year came not only from just sort of this normal range on the VIX, it also came from the certainty that the Federal Reserve was going to cut. And as we got to April, yes, some of you mentioned, we talked about FOMC member Bowman. When we started getting a lot of very odd commentary, and all of a sudden traders were thinking, not only are we not going to get as many cuts as we thought, now we've got a Fed member kind of opening the door to hikes before cuts. And you know what? Hit the fan, right? And that's really where confusion, uncertainty, especially macroeconomically, when that was the fuel that drove this thing higher, you can see why April and in the aftermath of April has sort of left a little bit of a disappointed type price action, right? A little bit of a disappointed type price action on the screen. So as we looked at the VIX, I removed that daily price movement range so you could see the action. So let's put that back on and we can take a look at this action together. All right, so when I look at the VIX, not that the daily price movement range, the DPMRs are not helpful, but just for the clarity of seeing that range, which is the most important thing, you'll see how much we can understand by seeing where the Darvas levels have identified the high and low of the range and where that normal sweet spot is inside of that 12 to 16 range. All right, so there is what we have. A couple other things to note about the current action, which is frankly pretty promising. The other part is we're starting to get above this cyan line, which is the anchored volume weighted average price. Now, emphasis on anchored. I do not use a rolling VWAP. I use an anchored. And this allows me to see where there is support and resistance, kind of another way of looking at bullish optimism versus bearish optimism. Having now gotten above this level, and much like accelerating below 16, we're accelerating off that VWAP on the S&P. Again, this bodes for not necessarily up in a way action, but at least it reduces the likelihood that these red candles that we had for so long are no longer indicative of the likely downtrend that seemed that it was on its way, but rather we've gone from a very brief period of a downtrend back to a sideways market, and neutral candles, these yellow candles, have also shown up. So more neutral. So it's not a matter of, are we in an uptrend yet? Remember, we have to break the bearishness of the previous action. And then once we can break the bearishness, we'll likely go to a little bit more neutral action. And then from the neutral, we'll see if there's enough to power everything higher. Above about 52.20, we should start to see green candles again. And those would be the bullish candles that we loved through so much of Q1. All right. So that is where we are in terms of the bigger picture. Let's grab a few questions here and go from there. Yee, thank you so much. So by the way, those of you that are members in the Sector Secrets Mastery, I just want to mention every single day we do a couple of things. One, I share with you all the trades viz. What are the trades that we took in the room? What did they produce in terms of dollars and points and trade activity? What were the losses? What were the gains? Is the account growing, that kind of thing. The other thing that we do is every single day, we've been doing this now for just over a week, every single day I send out a trade recap. What were our day trades? What were our swing trades? What did I buy at? What price did I get stopped out at? And I share that detail with you all as well. So the Friday recap, for whatever reason, I guess I forgot to send it out on Friday. So I sent out that Friday recap to our Sector Secrets Mastery members this afternoon so you could see our Friday recap. And so those are things that if you're a member, hey, Rog, where are you getting in? Where are you getting out? What kind of point gain or loss did we see? What kind of dollars then would be associated with that? Is this growing an account? So those are the things that everyone asked me for. Even also, how much risk per trade, right? So anything that only reduce, let me tell this to y'all right now. One thing you'll never see me do is, hey, I made 300% on a trade. Who cares? If you take 10 cents and take it to 30, does that really matter? Right? So remember, if I say I made 300% and the closing price was $2, you take out, what did you pay the option for, Rog? And you sold it at 2. That difference is how your account grew, right? So as I like to say, we don't pay our power bills with percentages. So be aware, it's not enough to know just dollars. We need of gain. We need to know how much were we risking, right? So if I bought $2,000 worth of calls in a particular symbol, what was my risk associated with that trade? Also, what was my reward associated with that trade? And those are things that if you're looking for sort of the math of account growth, that's the language, right? And a lot of traders simply won't do that. That's the language of account growth, being very transparent about these things. All right, so we also have, so thanks, Yi, I appreciate that. All right, so let's take a look at American Express. Sure, Grace, let's do this. Let's take a look at American Express, comparing it to the other symbols within the XLF. So this is the watch list process that we use in the Mastery. And what it is we take a look at the stocks that are weighted within that sector so we can have a really good relative performance comparison. I'll tell you, the best two stocks, Grace, the best two stocks in terms of organized uptrends are Schwab and American Express. And I know I need to re-update the list here. I don't know why Schwab's here twice. This should be Visa. All right, there we go. So there are certain names that we want to avoid or put on my do not trade list or put on a bearish list. Berkshire would be, MasterCard would be, Visa would be, right? But what's bullish? Most bullish is Schwab, the most bullish. Anything that's dominated by green candles, like American Express, would be open to buys too. So the next level down, if I don't have a trend, is focus on those symbols that have the most green candles, right? So if I don't have a trend like I do on Schwab, or if I don't have a downtrend like we do on MasterCard. I mean, look, if you want to short something, not my cup of tea right now, but if you want to short something, there's your list. Right? Look how easily we can determine that. So the more green there is in the candles, the more bullish. So it may not be a trend, but it's likely to continue to the upside. So that's American Express. All right. And then next up is NVIDIA. All right, let's do the same thing, Fernando. Let's open up the SMH. And if you don't have a consistent relative performance base way of building a watch list, come check out what we're doing in the Mastery. Because one of the things I absolutely believe is that what we trade is more important than how we trade it. A momentum trader can make money in an uptrend or a downtrend. An exhaustion trader can make money in an uptrend or a downtrend. The difference between traders who put on trades and grow accounts and the ones that don't is the follow through. So if I'm grabbing a sector that's just now starting to shake off a little bit of the weakness, and I'm not seeing a lot of green on a lot of these candles, the next thing I'm going to ask myself is, are there any shorts, right? ASML, Intel. So there might be some shorts here. There might be some short trades. There's not a lot that I'm really thrilled with. I'd have to throw AMD in there potentially as well, although it's not high on my list for shorts. Shorts ideally would be symbols that are also below their 200. Those white dots, you'll see AMD, it's just above it. So be careful there. But ultimately, what I want to remember is that is NVIDIA in an uptrend, and what time frame are we looking at? One of the things that we do, and it's just a good habit for everybody, is it's not about, again, when you're in a trading room, just let me let me mention this because this is how we operate in the mastery. When you're in a trading room, or especially a mastery, the idea is, well, mastery. And the best way to understand, let the trader on the mic help you and understand is tell them, hey, Rog, I'm looking for a buy on, for example, NVIDIA. I'm looking at the 1 hour chart and I want to play a mean reversion. Or Rog, I'm looking at the daily time frame and I'd like to see an oversold buy. If we can all get in the habit of thinking that way, communicating that way. Remember, someone who's day trading NVIDIA could have a very different take on what NVIDIA is doing because they're looking at a 1 minute chart, 3 minute chart, 5 minute chart. Someone who's looking at short-term swings, maybe a 30 minute or 1 hour, is also going to have a different take. So if we can start thinking in the language of time frame and direction and then strategy, what that's going to always allow us to do is put the conversation out there in the best way possible, because it also reflects what our thinking, what our analysis is. So if I'm looking at an uptrend on NVIDIA, I don't have an uptrend on NVIDIA. Fernando, that's the first thing I got to point out. I don't have an uptrend on NVIDIA. I don't even have green candles. But if you were to say, Rog, I'm looking for an uptrend, is there one? Yeah, I would say keep an eye on the 1 hour for a short-term swing. Do you see the difference, gang? Look, I think at some point, everyone, this isn't top 40 radio, where you call the radio station up and ask for your favorite song, right? We're trying to get better at trading. And the more we can elevate the discussion, the more we can add the detail of the necessary components of an actual trade to the discussion, the better we're all going to get. That high tide is going to lift all boats. All right. So thank you for the question, Fernando. How do I determine which sector is starting to show strength? We look at relative performance, Fernando. If you've been watching Charts and Coffee or even Top Tier Outlook, you'll see that's a regular part of our conversation. All right. Next up is what about gold? Sure. So if I'm going to look at MGC, Doug, I'm actually going to start the conversation at the full size contract of gold. Even if I'm going to trade GLD options, I'm going to start the conversation with the full size futures contract of gold. So if I like gold, the question then becomes, which way is it likely to go? For me, it's neutral with bullish. So you're asking about 2277. I mean, I don't know where it's going to go. I don't get that specific. Trade targets are not trades. And I know that's not what your question is at all, Doug, but please remember, a lot of traders want to say XYZ is going to this number. And my thought is always, and what's the risk, tolerable risk along the way? Again, this is the language of trading, and far too many traders are not given the language of trading. So we're kind of talking in this broken jargon that isn't going to get you where you want to go. So if we want to start looking at gold, what's next for gold? I need a setup. The most likely setup is a buy for me. So none of my targets, I have an oversold. I do have support. The previous trend was up. I'm not looking for lower lows. Now, could we head lower? Sure, but I'll be looking for something to the upside. The first level of resistance is going to be right here. I don't know what that price level is. That first level would be of resistance around 2370. The next level of resistance would be about 2450, but I have bullish bias. Do I think gold is heading lower? I do not according to what I see on my screen. However, here's a real question. If I wanted to look for gold to head lower, I would need to have a setup off resistance that would allow me to get long puts, right? I'm not going to get long puts down near support. So again, these are all tactical questions we ask when we're thinking about all the different components we need in a trade. What's the underlying structure? Meaning, is it heading higher or heading lower? What's the most probable direction? After that, we ask ourselves, well, where can I get in to engage that probable direction? And how much risk is involved with that trade? Lastly, it's where could it go? Right? But again, when you turn on television, they're going to talk about whatever going to a certain price. And my question is always, so we just buy today and wait for it to reach the target? Believe me, gang, that's not a trade. So that's the way I would look at anything, whether that be gold or crude or NVIDIA or what have you. That's the way that I would look at it. Anthony, yes, thank you for asking. When will the new HPMRs and DPMRs be available? I have them running on my chart now. They should be available to you all tomorrow. So if you are an hourly price mid-range subscriber, or if you've hopped on board from the class that we had, the Top Tier Pro System class, which I think you could probably still get a hold of if you call the office. depending on which level of the class you got, you have the DPMRs that came along with that. So the daily price movement ranges will also be updated as well. All right. Next up is, let's see. Trading is a journey. Yeah, look, it's exactly. Sometimes the journey to the target is untenable, right? Sometimes the journey to the target is untenable. Absolutely. And if it's not, yeah, I can't get, absolutely cannot get in there. All right, let's see. Let's see. Cody, when you are sharing all your trades, and I mean this respectfully, when you're out there sharing all your trades with transparency, wins, losses, everything else, right? I'll give a rip. Right now, Cody, seriously, this is not the channel for you, right? This is not the channel for you. So I don't want to waste your time, right? Next up is, so no setup. Yeah, Doug, so if I'm looking at that gold, so let's go back to GC. Yeah, absolutely. Let's go back to GC. So if there is and you're asking, so would I wait for a pullback? I would absolutely wait for a pullback. However, is this a trend any longer? It's really not. It's really not a trend at the moment. The 1 hour for short-term swings is a mess. When I look at something like this, I don't see an edge to control risk from. I do see a better edge to control risk from to the long side. Now, what would I be looking at the long side, gang? I don't have any red candles, right? So there's no bearishness that I can use. And then I have mostly green candles that preceded this very mild amount of chop, right? That's really where I would say this is just a pause in an eventual move higher. And ultimately, I also want to remember, why would gold move macroeconomically? And I would say the upside is still the best path of least resistance. But I agree, it's not been as clear in the last week or so. It's certainly not been as clear as I've seen, obviously through March and even parts of April. So clarity is a thing. If I don't have the clarity, Doug, it's okay to say, well, I don't really have a clean setup here, which I really don't, not at the moment. Am I going to look to the long side? Remember, bullish is not the same thing as buying. Because I'm bullish doesn't mean at this moment I'm buying. It does mean I'm looking for a buy. It also means if someone said, at least in my jargon, right? It's all jargon. In the jargon of when I say I'm bullish, I'm looking for a buy and I'm expecting support to hold. I'm expecting upside follow through. That's what's all sort of wrapped up in this conversation of being bullish. All right, next up is we take a look at the ES. And I'm going to wrap the show up here in a little bit, gang. We usually run about 20 minutes. I know I kind of did that macro breakdown and everything, but I wanted to make sure we at least start the week with that. As far as the ES goes, look, we're just starting to see some clarity on S&P. So more so than anything, the best way to tell y'all what I'm interested in is what I'm looking at. On Friday specifically, we looked at Schwab, which I'm a big fan of for a 1 hour short-term swing. We're in Qualcomm calls and we're in Google calls, right? We're in Qualcomm. So that gives you an idea that I'm really not playing indices overnight, although we have been day trading them, not really pushing follow through on indices quite yet. We're just getting the clarity now. And then I am trying to find trends either at the sector level or the individual stock level for follow through. All right. Last question is, do I have any bias for this week? Oh gosh, Alberto, it's Sunday evening. I have no idea what this week's going to bring. I'm going to look for upside follow through as long as the S&P can remain above that VWAP, as long as the VIX remains below 15 and continues to sink in that 13 to 15 range. But Alberto, nobody knows, right? I mean, nobody knows really what's even going to happen Monday. Nobody knows what's going to happen 2 and 3 weeks from now. Could we guess at a general move higher? Remember, gang, it's the journey that is what makes trading trading. It's not me saying, hey, let's say I said, hey, Alberto, we're going to be higher from here on out. Let's say I said that. Now what, right? Remember I said, hey, here's a target or here's a directional bias. And what's the trigger? What's the risk associated with the trigger? What's the first target? What's the time horizon for the trade? Those are all the aspects. So I hope that makes sense. Alberto, I'll be straight up. I have no idea. I have no idea, my friend. But I think if most people were being honest, they'd also say, we don't know, right? We'll just take it from from level to level and see if that can culminate into a trend for the S&P or things like Google, which are already trending. I'm going to buy the dip and look for more upside. So hope that helps. As always, gang, thanks so much for being here. Sorry the show ran a little longer than normal. And gang, I mean it sincerely. I don't know what's going to happen tomorrow, right? All I can tell you is what I see in my charts, use the consistency and go from there, right? Okay, have a good one. Enjoy the rest of your weekend. I'll see you tomorrow for Charts and Coffee.